And we're here.
Hello, hello. Welcome to this week's edition of Vishal and Company. This week, Vishal is going to be talking about the stock market sell-off, the US dollar breakout, and oil hitting a resistance zone. Galen is going to put his 2 cents in on Elon Musk messing around with nickel. And lastly, TK is going to hop in to give a bit of an overview on the month's market sentiment and underlying economy. I'm the resident not finance person to check all of them if they're not making any sense. And that's it for today. Vishal, all yours.
All right, thanks, Maddie. So it's been a wild week on the stock markets, a wild day actually as well. A lot of red, a lot of headlines about a stock market crash, and you're seeing today a nice bid up after we were down like some 300 points earlier on, and we were seeing a nice bid up. And I know a lot of people want to know what comes next. What do these markets do next? But just before we talk about that, I want to look at two other markets here because they can maybe help us understand where the stock markets are going. I do want to look at the oil markets. This chart, if I remember correctly, it was 2 weeks ago. I think we talked about this on the show, about this major resistance zone here at $66. And I was saying, if oil remains above 53, we're likely to hit that zone. And the price of oil has been strong and very resilient. We are actually testing $66. So as you guys can see here from the chart, it is a major resistance zone. And what I mean by that is a price ceiling. So you can see here we've tapped it twice before. This is the third time. And if we do break above $66 on oil here, it looks like we will go to around $77 a barrel. So get ready to pay more at the pumps. I know I am because I have to purchase premium gas and it's already pretty crazy. So do expect that. And generally the way oil works is because the banks are leveraged with oil because they had to provide loans to the oil companies. When oil does jump, not only does the energy sector do well, but so does the financials. And I think it's really apparent, especially on the Canadian markets, the TSX, which even though with the market sell-off has held up relatively well, and that is because almost 70% of our stock market is composed of the energy sector. So if oil is holding strong, the Canadian markets will hold strong as well. And you can see here, we are holding the previous zone of 18,000 there. So the fundamental news for oil was OPEC decided, OPEC plus, so that's OPEC and Russia, decided not to cut production, and the oil markets loved it. I just want to show you this crazy 1 hour pop here in oil. Might not be very, might not look, too concerning or too exciting to you guys, but we don't really see that kind of moves in the oil markets often, and it really did move like Bitcoin on that day. It was just a really crazy pop. Never really seen anything like that, except that major sell-off last year in February. So oil markets, very exciting. We are at this major resistance zone at 66, so we will watch to see if oil does reject and flip back over or continue higher. And again, the dynamics. Is this supply and demand? Or is this basically just a run into commodities or something that's relatively cheap? And again, the other big fundamental is, the oil is the reopening play, as you're pricing in future airfare travel and people getting back to drive in their cars and all that kind of stuff. So very interesting market. And yeah, the OPEC thing, it did sort of hit that supply and demand issue there. So watch this zone. I think it's very important. Another one of major significance is the US dollar. You guys know about the currency war. We've talked about all these central banks trying to weaken their currency here. And we had a major pop on a major trend line break here on the US dollar, and it is testing 92.50, this major resistance zone here. And the reason I mentioned the dollar and why it's important in determining where the stock markets will go is because we do watch that 10-year yield, which has been the story all week and all week last week. When the 10-year yield, which actually hit 1.6%, really, really big, and we'll talk about that in just a bit. But when we're seeing the 10-year yield spike, what this means is that money is leaving the safety of bond markets. And using the asset allocation model, we would expect that money to flow into the stock market. But that didn't happen. The stock market was actually falling because I think, and many other believe as well, that the market is spooked with higher interest rates due to the amount of debt in the system right now. But again, we'll just talk about that in just a bit. So if we do not see money running into the stock market when bonds are selling off, but we see rather that money run into cash, because that's where it was going. We had a sell-off in gold. We had a sell-off in Bitcoin. Well, I guess you could say that money was running into oil as well. But really, oil and the dollar were the only two things that were shooting up higher. So when you see this, when you see money running into cash, running into the dollar, it is quite significant. It means people are spooked. So watch to see if this dollar run actually gains more steam. And if it does, I think there is some trouble here for the equity markets. And we talked about this pattern last week, our good old head and shoulder pattern on the Nasdaq. It did actually trigger on Wednesday. It did trigger on Wednesday. So I've actually taken a couple of shorts on the Nasdaq. I did take a couple of my profits, but I do expect we will bounce back up to 12,800 here before rolling over. And you're already seeing some selling pressure here. But what comes next is technically the Nasdaq is now in a downtrend because we've broken this uptrend unless it closes back above 12,800. So that's the key level on the Nasdaq to watch for next week. If we do get back above that, I do think then we continue the resumption higher. But if we do not, we do roll over. And I'm just going to quickly show you here the Dow, which is still holding relatively strong. So this is why a lot of people are talking about this run into value and an exit or a rotation out of technology.
Yep.
And we'll talk about what that could mean for ARK in just a minute. We're seeing the S&P here, which could be forming also a very similar pattern to the NASDAQ here with that head and shoulder, but we will watch to see how this develops next week. And same thing here with the small caps. The Russell 2000 is also seeing a major sell-off here. But again, the story was this 10-year yield. And going into Wednesday, Fed Powell was speaking to Wall Street Journal, and a lot of people wanted him to mention something about the yield curve, right? They wanted him to say that, hey, yes, the Fed is worried about this higher interest rate on the 10-year yield, but don't worry, the Fed will intervene, and we will buy bonds, and we will do something called yield curve control, or what they called Operation Twist. Back in 2008 in the Bernanke era. We didn't hear anything about that. We heard a lot about inflation and how there's no inflation, but the Fed chair did not mention anything about yield curve control, and that did spook the markets a bit because rates, as you can see, did rise and the markets did sell off. But do not fear, I still think mid-March, if there's a bit more pain here on the equity markets, I do think mid-March, there is a Federal Reserve interest rate decision, and I believe Powell will step in and implement yield curve control. But that's how crazy the world is, where the market and the media was begging for a manipulation of the bond market in order to keep interest rates suppressed and to keep the party going. So what do you guys think about that?
I think the party's about to end, my friend.
Yeah.
I think what we're seeing here, the range that you've got,
Yep.
I don't know if it's going to come back up to 12,000. I think we're going to see it struggle a bit in that range, and I'm going to think the bottom's going to drop out just a tiny tad. The market's way overvalued, and it's been way overhyped. It's full of all sorts of crap right now. Stuff has to shake out. Investors have to find out what's real, and eventually we will reach, a normalcy, right? And the key indicator, to a certain extent, is that we're not seeing the same damage to the Dow Jones.
Exactly. Yeah.
Right?
So you're thinking this is a shift now out of technology or out of rotation and into safe value stocks that will pay dividends, like your Coca-Colas, your Boeings, I guess, in a sense, your Disneys.
I think we're getting a little bit sick of the whole rainmaker capitalism idea of, I'll promise you, a miracle tomorrow for $1 billion today. That I'm never going to come up with the miracle, but we'll just keep taking money from you, right? Well, I mean, for instance, I mean, you got Elon Musk. It's just loaded for bear, messing around on the market, changing things around. Sorry, I'm going to back off of that. We'll talk about that later. Let's talk about that later. Sorry. I no, seriously. Let's talk about it later.
Okay, cool. No, we got to mention. So you just alluded to this rotation out of tech. There's a tech fund out there. TK, you probably know about them.
Yes, the big name is ARK Invest. My majority of their holdings are in everything fancy outside of GameStop that people have talked to update. And I was looking at their latest 13F, which is their government filing. And just to throw these at you guys and, get your impression on this, their top buys for the last quarter of the ending December 2020, they bought the new buys, the top buys.
Okay.
Was Exact Science Corp, Teledec Health, Shopify in Canada, representation, and Baidu, an ADR.
Okay.
Their top sells were Slack, Illumina, and Linux. Those are the top sells. Their largest holding, which is 7% of their total portfolio, is Tesla. Their second largest holding, which is 4.75% of their portfolio, is Roku. And then the trend continues like that, holding these new wave household names.
Yeah.
So they're obviously really exposed to, they're basically, if you don't want exposure to the Nasdaq and you want that extra alpha from Cathie Wood's intelligence, up for the ARK ETF.
Yep.
But a lot of people, specifically clients, have asked her a question about liquidity concerns. Because she's an open-ended fund, basically anybody can come in and out of her stock daily. So there's no lag between settlement of the securities and you moving out of the fund. People have said, okay, what happens when an all market crash? Market value before you reported before was 16 billion, but now it's 37 billion, meaning a lot of that is unrealized gains. If you start chopping down on those unrealized gains, do we lose our capital? Am I buying an overpriced ETF? And her thing is, ARK is still undervalued and underappreciated because people are moving into quote unquote value stocks now. And I think that's completely dodging the whole thing, especially how exposed she is to the rainmaker capitalism that Aaron is alluding to.
Exactly. The whole thing coming out of Silicon Valley has really distorted the idea of investment and waiting for what you interpret as growth. And we've been following that train for a long time. And Cathie, I think, is kind of like the pinnacle of that philosophy of grabbing tech and just running straight ahead with it because, it's a stonk. It's just going to go up, right?
Well, they use the term they're in disruptive innovation. That's the term they use.
I don't buy that. I buy disruptive financing. Right? I mean, that basically what's been happening is that this money has just been continually funneling down to the point where guys like Elon Musk can make claims on Twitter saying that Ford and Tesla are the only two startup auto manufacturers who haven't claimed bankruptcy. What he fails to say is that Tesla did not survive, or Ford survived its bankruptcy by actually manufacturing fucking cars. Excuse me.
It's true.
Elon didn't survive bankruptcy by doing his business. Elon survived bankruptcy by hiding in his accounting books, right?
Sure.
With billions of dollars in his pocket, which he plans to subsidize all of his sales with, I'm sure, over the next little while in order to hammer into the market. But get this, Adam Jones of Morgan Stanley released an analysis to the media on Wednesday saying that the Mustang Mach-E seals major Tesla sales. Tesla's share of the full battery EV market declined significantly to 69% from 81 in the prior year. And this is just one model being introduced into the road, right?
Wow.
The Ford Mustang Mach-E accounted for nearly 100% of share loss.
Wow.
Tesla has a hard road ahead.
That is
Sorry.
true. There was this analyst on one of the financial media this week, and he was talking about that specifically. He's like, okay, the narrative of Tesla and a lot of the companies today, it's amazing. Capitalism is creative destruction. That's, what it's based off. And yes, you're free to generate ideas, but when you get to a point where your idea is not generating a return, the people or the market should react rationally to that.
Yeah.
But because we've had such a long stretch of not having to think rationally, people can jump into, not pinpoint anything, NFTs, Bitcoin, and that kind of stuff because they missed out the last train. I bring back from history all the time because, history doesn't repeat, but it rhymes. The Nifty 50s. The Nifty 50s it was a thing that happened when the Dow Jones was still the major index, where people were like, these stocks are I think at the time the Nifty 50s only had 10 stocks in it or something like that.
10 stocks, okay.
And people were like, this is, the new wave of technology. Those companies like American Express and railroads, and like that kind of was really old style, old economy companies, but they were, well, as of today, but they were the ones that were going to revolutionize the world. Mm-hmm. People speculated, and then they crashed, and nobody talked about them for another 50 years after that. And now they're some of the strongest companies in the world, where people don't even talk about them. And I think it's the same thing that's happening here. Like Galen is always alluding to it, that I'll like for Tesla specifically, I love the EV thing. I think it's amazing. We need it. Sustainability is an important thing. Yeah. We only have a few more years to save ourselves, but we shouldn't forget that the essence of the fundamental business is an automotive business. Mm-hmm. A Jeep and a Merc and a Tesla do the same thing. Their margins are the same. Only thing you can control is your cost at the time. And that's what he tried to do at the beginning, but realized how thin margins are in the industry, especially when the shelf life of a car can be 15 years after you buy it. So that's really difficult to scale if the market reacts to the technology behind it. And a lot of Cathie Wood's investments are like that. They are innovative and disruptive, but there's no difference between being early and being wrong in the moment. And I think she's playing on that ground right now. She can be really right and prove us all wrong in the next 10 years. Or
so
she can just stay letting you wrong.
I got a question for you, but before I ask you that, I just want to show you guys this. So I'm looking at the Nasdaq chart here. Sorry, this is the Dow Jones 100-year chart. Going back to the 40s to the 70s here, and I just want to show you this beautiful head and shoulder pattern here on the weekly that you could, I'm just saying it, right? It's there. It's a pattern. These patterns do happen and repeat itself, and you can see that was a topping pattern, right? That generally is a topping pattern, and that's why I personally am more concerned about the Nasdaq here, because this would mean that this bull trend is over, and we should be seeing at least a few more legs to the downside. And going back to ARK, we know ARK is basically big in tech, well, all in tech. And I wanted to ask you guys, how does ARK hedge this? How do you hedge this move lower? And right now what we're seeing is we are seeing some outflows out of the fund, but we're seeing Cathie Wood sell off a lot of the larger cap positions and buying smaller cap companies like, Albit Systems. I don't know the price of these per se, but that's what she's been doing. She's been buying a lot more of these smaller caps and selling a lot of the major caps. So is that how you hedge when you're pretty much full in tech?
Well, I mean, if you look at the way that the economy has been heading over the last little while, and I could be wrong, but it seems to me that the upper end, like the cream, I guess you could say, which is the wrong fucking term, Walmarts and Amazons and all those guys really cleaned up, right? Their percentages of profits were huge, and I think uncharacteristically so, and also very particular to the environment that they were in. If we hadn't had the pandemic, Amazon or Walmart or any of these individuals wouldn't be as rich as Croesus right now, right? We'd all be spreading wealth around, buying it from each other like we usually do, and that's what we should probably head back to. And I don't know why anybody hasn't. I mean, we've started in some senses to combat against Amazon, meaning that there are other services trying to group sellers together to get their product out without stealing their ideas, reselling their product, and ramming them through on these algorithms. We live in a monopolied portal economy where all these, like Uber and the gig economy, these guys are acting as gateways that we don't really need anymore. So all of this inflationary stock price that we see with these major companies really need to come out.
And I think the big one that a lot of people are talking about has been Zoom video. Zoom video, Peloton, if these things correct, I mean, it's going to get ugly.
Oh, yeah.
Billions of dollars of market cap loss. Actually, because I wasn't here on last week's show, it was a good show, though. Was missing a bit of elements, but that's my quality. That wasn't there.
Absolutely. We missed your balls and bones.
There was a comment, if you guys talked about it, but they asked, how are you guys hedging this potential market collapse? And I want to put on the spot, because I like doing that to Maddie. Maddie, how are you hedging this potential market crash?
Sorry,
what are you doing to prepare yourself for a potential crash or a downturn in the stock market? How would you do it?
Are you buying the dip, or are you buying cheaper companies? Or
I think with everything, when I was doing research on everything happening with GameStop, for me personally, I don't have enough money to lose. So just like the most, like Disney, like things that are just so solid, so boring, I can just dump my money, my like little extra money in every month and just kind of walk away from it and not have to stress. For me, and I think also a lot of my friends who are in the arts, when I've talked to them about it, is what they would be comfortable doing too. Because all of this is just a nightmare for people, especially who have like not steady income and they'll get these big influxes. Like this is just way too stressful personally. So I would go with like a Fortis and Disney and I don't know, the boring ones. Maybe.
Well, I think boring is the right word. It's the key word as well.
Yeah, boring.
I kind of see that. The reason I'm asking is a lot of people now will move into, or should move into, companies that you know well. Yeah. You can't just make a bet on XAY just because of this narrative that's there. But yeah, a lot of the time now it's probably best to understand certain companies and then just hold the bag until there's a recovery. But yeah, Galen, how about yourself? I know.
Well, okay. I think right now the whole thing is just proving that the I don't know, the stupidity of Wall Street bets proved the stupidity of the public stock market in the sense that, yeah, guys, it's a casino, right?
Yeah.
The unfortunate part in revealing that secret, it also revealed that chaos can now come from all sides. Meaning that all these trends that you drive stuff up and you're fighting other people off and running things up on your own for purpose of only creating a profit in the short term is such a wildly distributed, fragmented game Is it even worth it? Are only the quants going to profit because they'll just ride up and down, and who gives a crap what you and I do, right? Or are we as investors finally realizing, let's get off this damn merry-go-round, start looking at the facts again, meaning the balance sheets, and what is the performance of the company now? What is it actually doing?
True.
Yeah, and that's why I've said boring is the key, right? That's a good word. Just look at companies that you think are going to be here 10 years from now, likely paying a dividend, and if you're not someone that invests regularly, like look where you spend your money, and then buy those stocks, perhaps, right? Sure, when a market does fall, all these stocks will fall as well, but again, just using the Buffett model, who buys good companies that pay dividends, those companies will still be paying dividends. And if you keep averaging down on those companies, if you have a DRIP, a dividend reinvestment program, the dividends that you get paid out can be reinvested to buy more shares of the company. So if you stick with those solid companies, keep buying their shares, averaging down, knowing that they will be here years from now, knowing that they do pay a dividend, I think that's something that people should look at. And yes, it is boring, and it's funny because I was just chatting with some new investors, and I told them this, and they thought I was some sort of guru or some sort of prophet, that told them something big and major. But they're like, yeah, you know what? That's actually smart, and we've heard about that before. But hey, just this FOMO into GameStop, into Bitcoin. Yep. I mean, I believe that could be rich tomorrow or a week from now,
stop the social media trading. Stop it.
And we've said this before, when you are missing out on something, if you feel FOMO, you've already missed out, right? I've survived 8 years in the markets not because I chased these FOMOs, right? That's what I used to do back in the day, because that's generally what the new traders do, right? They go on social media, and you hear you'll get a message from a trader on Twitter saying, hey, you have $1,000, I can help you grow it to 60K. I'm not going to name any names of some people who do that, but I was one of those guys that joined one of those chat rooms, right?
Gotcha, my friend.
And when I was a university trader, that's what I would do in class at UBC. I'd be on the markets. But a lot of people would do that, right? We'd be trading $1,000 accounts, making $200, $300 a day, but then we'd end up losing it, right? Most of the time. And it was because that was the persona of a trader, right? Movies and
the last day trader I met, which I think covers 95% of the people who call themselves day traders. The last day trader I met proudly drove a vehicle that I wouldn't even expose on the street. You don't make money. You spend all of your time going, what the happened? Oh my God, I got to recover. That's what most of these guys end up doing, right? And they go off saying, I'm a day trader. Well, I can tell by your vehicle that, you should find another job, basically.
This is the secret. The secret about... Oh, go ahead.
Oh, no, I was going to say, a couple months back, I have this love and hate relationship with, the same way people have a love and hate relationship with Tinder. I have it with TikTok. Okay. So I'm on it, and I'm off it, and I'm on it, and right now I'm on it. So my work is a bit slow. But there's a lot of investment gurus on it right now. Some really smart people, and they get me hooked. And I'm sitting there, and I'm like, God, you have the secret. You figured it out. Mm-hmm. And I'm about to log on to their Instagram or whatever to get more information, and boom. Limited only one time off a course, and I'm like, oh my God.
You gotta take it, man.
They know that game, dude.
Sucked in again.
They know that game. It's just like the acting industry. A lot of the money is made from teaching it rather than doing it.
What I wanted to just quickly say, this is the big secret about the day trading and stuff, right? Galen, you alluded to it, the algos. And this is the thing, right? A lot of people need to understand, Wall Street does not actually day trade much. Because the thing about day trading, looking at these 5-minute, 30-minute charts, it actually is very stressful and emotional to the human mind, right? So this is why the algos and the computers actually day trade for the big banks, right? lot of the people, like the people in the banks, they're looking at the daily charts, the weekly, long-term trends, because that's where humans can control their emotions, are much more suited for that kind of environment. So
And
if
the
you're a
algo,
day
and the
trader,
algo is all about shaving pennies, right? I mean, they're
yeah,
meant
yeah,
to commit trades so
yeah,
freakingly blindingly fast that those
yeah,
like
yeah.
tiniest of market inefficiencies result in millions of dollars by the time they finish their trades.
And not only that, it's just like if you're one of these day traders that are just new to the game, you have to realize that you are competing against these computers, right? And in most of these times, these computers will win.
Yeah,
I'm not saying
I are
that,
not that fast.
yeah. So I'm not saying that you can't be a successful day trader. I think you can, but you'd have to. My advice would be to stick with breakout patterns and just stick with that. But most people don't do that, right? Because they look at the hypes. They have to say, hey, this is the FOMO, this is the move that's moving, and I have to jump on it. And just note that you are competing against these algos and computers, which are setting all these traps, and which is why when GameStop and Wall Street bets happened, we were saying this, but the institutions loved it because they love new money coming in because they can set these traps. They know that new
People
traders.
are still getting suckered. Basically,
Yep,
people are still getting suckered,
because
and it's
they
the game, right? You got to find the rubes. Hey,
yeah
rubes,
because
you want to buy this?
yeah because they know, right, that like
Yeah.
a lot of new traders, their emotions, they're not like emotionally stable to handle
No,
price drops in
no, and they get
five.
all arrogant about it. And I'm not letting go of my stock. This is going to $1 billion. And
Yep.
everybody has it, and it's natural human tendency. But when you're trading stocks, you really have to detach yourself from that.
100%. And that's why I always advise look at the long-term charts, look at the daily charts, look at the 4-hour charts, because you are basically detaching yourself from a lot of emotions. Because I can be day trading here on the 5 minute, and I was looking at the shorter time frames, right? But it looks like, oh, it's the end of the world here. Oh man, look, the markets are tanking. They're done. They're finished. But if you look on the daily chart or the 4-hour, hey, okay, there's a major support zone here, so it's not necessarily the end of the world, right? That's what I mean, right? It's just like you'll get slapped around a lot on the shorter time frames. But if you do step back, yes, we have a breakout. We should expect a pullback, but we'll likely roll back over, right? Just the way that market trends work. So that's why I prefer the 4-hour and the daily charts and the weekly, the longer term, because you can control your emotions much more better than making decisions on a 5-minute or a 1-minute basis.
That's true.
Yeah.
I asked, it was announced yesterday, probably the last thing I want to ask about on the roundtable is the U.S. specifically. I don't know what the Canadian government has done, but the U.S. Just put through a bill on vote by Kamala Harris, the VP, who broke the deadlock, for $1.9 trillion in relief. So finally, that fiscal stimulus that our savior and Lord Powell has been asking, Fed Chair Powell has been asking for, more of it is coming through from the Senate, and it's a bullish sign of more money coming through, assuming money goes to the market.
So are you saying people? Are you saying people are going to take the stimulus money?
Yeah.
Are you saying people are going to take the stimulus money to open Robinhood accounts?
I have a feeling. I don't know what it is, but the atmosphere. I went to the bank the other day, and it's one sample group, but I was in the line and I was fixing a credit card issue or something, and the guy behind me was, talking about GameStop.
Mm-hmm.
And this is weeks later.
Oh wow!
And I was like, this is an indication of saturated. Everybody and anyone's uncle right now is a financial crisis. And I was like, okay, if this stimulus is coming in, you can only expect something to happen.
Yeah.
But we don't know which it is because people could short, people could. But what do you guys think? Another $1.9 trillion is being juiced into the market.
Yep.
Is it going to buy goods and services, or is it going straight to Cathie Wood?
That's the problem, right? I think if this stimulus package were to actually head towards the infrastructure industries, like United Rentals, I quote unquote bought stock back in, I don't know, April last year, May. I'm up like $7,000.
There we go.
Right, and it's just a steady fucking climb, and will continue to do so as the economy opens up, because United Rentals is involved in nearly every construction that takes place, because everybody makes scaffolding. Do you know what I mean? It's one of those things, and boring. They're not throwing out really exciting news releases telling me that they're going to be able to communicate telepathically in 10 years. They're just saying that we put our scaffolds out on 1,500 construction sites this week. How'd that work out for you?
I think the key thing is the reopening. I think because the economies aren't reopened, a lot of people don't really have places to spend money. I know a lot of people talk about food and all that kind of stuff. I've just heard a radio, if you drive around on your radio, you'll hear that in BC, or I think it might be all of Canada, but they're trying to get people to dine out, right? To go to restaurants and eat, because 10,000 restaurants have already shut their doors, and more will, as long as these lockdowns continue, right? So as long as the lockdowns are on, I think this money is going to go to the equity markets, right? And that's why, this is me personally, but I think government made a big mistake with prolonging lockdowns like this, right? And that's the reason why corporations are getting stronger.
Well, I don't know.
Really that, and
here we go. We're going to get not a little political, because I'm not going to get political about it. I would have to say that the lockdowns we have had weren't as effective as they could have or should have been. If you're talking about China's locking down of Wuhan, man, you didn't move an inch, right? That didn't happen here. So we can talk about all the extended lockdowns we like, but we certainly did fucking help out. Oops, I swear.
Yeah, I guess so. Yeah, but I mean, you got to look at
an obedient citizen.
Admittedly, I'm not living under the CCP, which is a good thing, but I mean, there you go, right?
Yep. But again, just following the money, we have to take into account. So because the lockdowns are still there, I do think that money is going to make its way here, because no one's spending money. And this is what we're seeing in the data, right? People are taking their checks. No one's necessarily spending it in the...
Do you think with this continued pressure that people are now going to start to take their money out of the market? It's not going to be this continuous thing. This thing with Cathie Wood is now proving that your money is not stonks, kids. You're not just going to leave it in and it's going to become $1 billion. You got to start watching it and make sure that you got it in the right places. So if people start shifting stuff around, we're going to see a pretty big move. And if the economy doesn't recover and the stimulus packages don't come out as intended, as I can see that they're already sort of doing, we could end up with a situation where people are going to go, well, that Robinhood account where I made 50 grand off a Tesla, I need that to pay my mortgage.
Yeah.
Exactly. It's going to be an interesting time.
Yeah.
Last comment, obviously. What's his name? I can't say his name. The GameStop guy. The guy from Reddit. But his position...
Deep effing value.
Deep effing value. His position in GameStop made him a millionaire in a matter of 6 months. I don't know what it was. Mm-hmm. And if I was him sitting there with that account, having testified in front of the financial boy, I would start pulling out some cash as well. With that $1 million could disappear.
Yeah.
I'm expecting a lot of people to start withdrawing.
Yeah. But the issue is, right, like, I don't know how well of, like, we live in the real world, right? So the thing is, there's nowhere else you can go with that money. There's nowhere to go for yield, right? No. That's the issue. And that's why I think money's going to continue to flow into markets. I mean, even if you sell GameStop or whatever, it'll probably go into Bitcoin maybe, right? Or maybe NFTs, maybe that's where that money's going, right? So you have to realize, like, that's the state of the world, right? There's nowhere to go for yield. People are hurting, and that's actually why money will continue to flow, right? Because they're living with those consequences of what's happening in the real economy. They don't want to spend money. And you have to be in the markets literally to survive now, right? To survive in the future, right? So that's what I mean. The problem
is you have to be smart about it. If you're still investing in GameStop, you're probably the same person that was investing in Blockbuster. Stop it.
But I mean, like, that's the thing, right? I think we will probably see a lot more moves like this. I think Rect was the other one, right? That was short squeeze. Rocket, that had a big short squeeze that the Wall Street Bets guys were doing. But you will see this because because of the state of the world and because of people hurting, they will be chasing stock markets because.
And remember, it's pretty well a zero-sum situation. So if you step into this fray, there's a very large chance you'll walk out with nothing.
We are running out of time.
Oh, sorry. That was me.
No, not at all. I think on that note, though, an important thing for investors, anyone to remember, there's a book called Warren Buffett Invests Like a Girl. I don't know if anyone knows of this.
No.
And
No.
the writer, her name's Luann Lofton. She's a financial editor and writer. And she basically writes, she says, like Buffett, women are more likely to have a calm temperament, a longer term outlook, do more research, trade less, and remain steady under pressure. And Buffett responded and said, I plead guilty.
Yep.
So,
Nice. Sounds like a good book. Great recommendation.
yes.
Long term,
There we
you
go.
can control your emotions.
Invest like a girl.
There you go, guys.
Okay, until next week. Thanks, guys.
Bye, everybody.